Okay. So of course the example with the gross entry with the invoice document, but what happened is capitalization of asset without deducting the cash discount by using gross document type. And the subsequent payment with deduction of cash discount can also take place in the reverse order in practice. So when we book the invoice, it was 110,000, but then we have a cash discount, we make the payment, then customer says, hey, we giving discount, you pay less. So now we pay 100,000, for example. Capitalization of the asset with deduction of cash discount. Now asset is capitalized with the high value and we pay less value. When using the net discount type, the delayed payment of the invoice amount without deduction of the cash discount. So capitalization of the asset with deduction for cash discount and payment of the invoice amount without deduction of cash discount. Okay. So what was happening in classic GL? System behavior in classic GL. The reverse, in the reverse case shown as well up to and including in 4.7, the asset value is corrected in the second step with the program SAP F181. An account assignment of the profit center characteristic was not possible during payment in classic GL. So in classic GL it was a two-step process, and at the second step itself there was no possibility of having an adjustment. If there was a unique account assignment in the asset invoice, the business area characteristic was transferred to payment and at least to bank, cash account and vendor line item. So business area was getting transferred. But for non-singular account, no characteristic account assignment was possible for business area either. So this was a restriction in classic GL. So thanks to new GL, which gives you this functionality and this flexibility to have discount while making the payment. Same initial payment again, payment of an asset acquisition invoice with deduction of 3%, where was the invoice was paid, was invoice to be paid was entered at a gross though. We book the invoice with high value, but when we make the payment, we make it less. We enter the invoice, screen 1 GL view, and this means that the asset has a value of 97,000. And then immediately after payment, it consists of two asset transactions: purchase acquisition and then minus payment 3,000. So the net happens to be 97,000. So the moment we post a payment transaction, it updates the asset and goes and deduct the discount value from the asset. So payment is integrated with asset in new GL. The post capitalization of the cash discount to asset is only possible if the document splitting is active. You do not necessarily have to define splitting characteristics, however. So there is a specific customizing for this. GL business transaction document splitting. Financial accounting, GL accounting, business transactions, document splitting. What we have then? Post capitalization. This is what we have. Activation of cash discount. So we have to give the field. So we have to enter the field like, business area or segment or not working. If you use post capitalization, program is no longer run periodically. So you can eradicate this program, additional program, and running of this program at the month end if you do this setup what we are trying to do now. So here you can define the characteristics. This is not still showing anything. So that's how you can enter the characteristic. Moving on. Exercise. We'll skip this now. So the next area is integration of new GL with CO. Okay, so the objective here is what we are trying to learn is returning follow-up cost online to CO and CO to FI integration, how real-time works and what does it mean actually when we say real. Everybody says real-time integration. What does it mean? So after this unit or lesson, we will be able to learn how follow-up cost can be distributed to CO line and decide whether this method would be good for your company. Configure the use real-time integration of controlling and financial accounting and understand its meaning, and understand the meaning of third period interval within FI posting period maintenance. What is third period interval? We will see that. In the classic FI environment, postings are in controlling were not reconciled with external accountings in real time. To obtain a reconciliation in the standard system, the reconciliation ledger was used. So there was an additional reconciliation ledger. In classic GL, there was no FI and CO real-time reconciliation. This periodic method is now replaced by real-time reconciliation, which we say online or real-time. Objectives or motivation for online distribution of follow-up cost. So what happened here is the vendor invoice paid with the deduction of cash discount. Cash discount amount should now credit to CO object in real time. The cash discount amount should now credit the CO object in the real time. So what it does is the moment we deduct the cash discount, now the discount portion is now going to CO, usually cost center or order the project that originally was debited. So at the time of invoice, whatever cost you debited, whatever object, same object will get credit and the discount will go to the CO area. FI activities: post a vendor invoice of 1100 euros, tax of 10%, pay the invoice with 3%, and amount paid at 1067. With older release, crediting the original CO account assignment object with cash discount was only possible. Again, it was a program which we have to run. This was the reconciliation program, FI to CO reconciliation. Then the program transferred the amount from the default account assignment object to the original CO account assignment. So this program used to try pick up from OKB9 transaction. OKB9 is the default account assignment where you assign the cost object by default to some of the GL account. Like for it says company code GL account, and this is the default cost account cost object. Direct link between FI and CO was not possible. In general, post-capitalized objects are real CO objects. However, in principle, statistical objects can also be post-capitalized. In this case, the document splitting does not differentiate between real and statistical object. So now the question is, what is real and object and what is statistical object? A real object is which is actually the cost object, which accepts the cost on which you can book the cost. Statistical object is on which you in the report you will see the cost, but the cost is actually posted to the real object, and statistical object is receiving the posting just for the information purposes. Financially, the information always get posted to the real object. Statistical is for additional reporting purposes, or you can say additional assignment that you want to see on the object. For example, you have a project, you book the cost to the cost center, but you want to see how much I book to the different cost objects, to the different projects. So the cost is financially the cost is posted to the cost center, but you can see by project also statistical report. So that's statistical object. However, this is different in update in the new GL or in FI tables. For example, when using the scenario cost center update, the updates only work for the real objects. So the real objects are the main objects in accounting system. Premises for online distribution for follow-up cost. Document splitting must be active. What are the prerequisites? Document splitting must be active. Cash discount account must be defined as primary cost element. So until or unless it is a primary cost element, it will not, CO will not accept that. So because in CO you can need to have a cost element, so that's mandatory. CO object that is to be credited online must be defined as an optional entry in the field status group. So in the GL account of whatever cash discount GL is, you have to define cost object as an additional, as an optional field, because you will not have it every time. Only in some cases you will have the scenario. So you cannot make it mandatory. So you make it optional. The document splitting characteristic for controlling that are used credit the cash account must have to be defined. The document splitting characteristic has to be defined. You define the splitting characteristics for controlling under customizing. This is the customizing. I think we just had this. This is not working. The following document splitting characteristics are available in addition to defined customer field. For example, order, cost center, WBS, network, sales order, profitability segment for COPA, real estate key for REFX, and cost object. The document splitting characteristic for controlling must be configured before the original vendor invoice is entered. If this is not the case, the CO object will not be written to the vendor document and therefore cannot be inherited. So the entire game is all about inheritance. Whatever is in invoice will be inherited to the payment document. If there is nothing in invoice, nothing will be inherited to the payment document. So this is how it looks like. You have FI document and you go to browser, accounting document, then you have a controlling document, and then you can see what is being looking in controlling. The defined document splitting characteristic for controlling is already managed in FI document during invoice entry. So that characteristic which are using in controlling is already being managed in FI. So from FI it is inherited to CO, and the system passes it through the payment document. So system is passing on the same characteristic. If no characteristic defined, then payment document only displays FI, no CO in payment document, because there is no CO in invoice document. Assume you credit CO internal order using a settlement. For example, in FI, CO to FI real-time reconciliation is configured. FI follow-on document would also be posted. If more than one ledger is defined in the GL account, in the GL, the CO characteristic would only be displayed in GL view, because leading ledger has the CO integration. So this is how it looks like. Posting to expense account, debit and FI account, and if the account is also defined as cost element, system charge the CO object such as cost center. Okay. Now what happened? Transaction 2, the transfer posting in CO. What happened here? Now for example, you do the transfer posting, you have the in cost center X here. Now you send from cost center X to cost center Y. So here what will happen? The changes result in real time for FI for each CO document, and you no longer need to manage the reconciliation ledger. So the moment you change here in CO, it gets changed in FI also. So that's real-time reconciliation. You not to do additional activities on the reconciliation ledger to ensure that your FI and CO are in sync. Real-time integration from FI to controlling has been available in SAP system from some time now. Only opposite direction from CO to FI was not previously possible in real time. This affects, for example, changes to characteristic in the following processes, such as periodic allocations when you do assessment, distribution, and transfer posting, manual transfer posting to CO through KB11N, activity allocations through KB21N, and settlement from orders or projects through KO88 or KO8G or CJ88 or CJ8G when you transfer the projects or internal orders. CO reconciliation with FI has always required the reconciliation ledger, which was maintained in cost element accounting. Periodic program runs carry out settlement summary adjustment for each cost element. So initially it was all managed through reconciliation ledger, but this is now eradicated with new GL. Transaction KLC no longer available because it was all about reconciliation. So this has been out now. You can use variant to configure the following in customizing real time. For which criteria you want real time, for when real time is to be active. So the moment you are in new GL, you can tell system from this date I want this to be active. And what are the criterias? Cross company code, cross business area, cross profit center. When you want this new FI to CO reconciliation active.